I want to. I do that. So, all right. So I need to make sure that I have. You guys are going to use the average of whatever I've made for the past 24 months, right?
Right.
And I need to make sure I have a P&L, which we all know. Like sometimes most small business owners, they're not always keeping up with a quarterly P&L, right? So what is the option that's available if I might not maintain a P&L? What can I do then?
Well, you can create one, or
Mm.
you can have the person who does your tax returns to create it. Preferably the person who does your taxes to create it, because they can see it. And we're going to vet and verify that what you say you make, you did make. How do we do that? Looking at your bank statements.
So no doc loan, no doc loans here.
Not yet. Nah, not to that. We're not going to discuss that one yet. So something that is very important. The mortgage industry has not caught up with technology, right? So Cash App, Zelle, Venmo, whatever you have in terms of those, you can't provide that documentation for us to verify your income.
Okay.
Because it goes into your account. You can push the button to have it sent into your bank account, but there's no attachment saying really where it came from.
See, and I guess the thing that's crazy is, Zelle can connect to my business bank account. Cash App has even a business setup. You know what I mean? So I'm thinking, let's say I'm the small business owner who isn't privy and aware of like Square, and maybe getting a merchant account. I don't have the traditional merchant account. I'm doing it this way because Cash App told me I can set up a business account. We know that at the beginning of the year, Cash App decided that if you get transfers of over $600, that you have to claim that as income. So at that point, does that still transition, or are they still like,
We haven't caught up. When I say we, I'm just talking about the mortgage industry in general, not necessarily my company. We just haven't caught up with the times of verifying funds. Like I know Zelle is safer than all of them because you can get Zelle through your bank account,
right?
Depending on which bank you deal with. So with that being said, keeping your money on Cash App doesn't work either. Now we could potentially, and it would take a lot of work. I'm not gonna lie, it would take a lot of work, but you could potentially not necessarily fight it, but show by having invoices.
Okay.
So you have to do double the work. Like you have the invoice, and you can show that, hey, Shannon Payton paid me $500 for, my painting service. She paid me through Cash App. Here's the invoice. But that's a lot of work.
And this is the same. So what you're sharing with us today, this is going to be the same whether they're a buyer or refinance.
Yeah, buy or refinance. Buyer or refinance it's the same thing. Because there has to be verifiable income. So if you do business through Cash App, you might want to try to invest in Square, or like Shannon said, get a merchant account. Or set up, just set yourself up to take checks or whatever you do, you need to make sure you can verify your income. Something we run into is, well, I get paid cash, like physical cash. What I do? Put it in the bank. Put it in your business account. So let's take barbers for instance. Typically they get paid with cash.
Right.
Just make sure you deposit into your business bank account on a consistent basis. And how you verify it is you just have to keep track of how much you made during the course of the year. And then you just provide that information to your tax preparer. And now you know that I made, $50,000, cutting hair. And it went into Barbershop LLC's bank account. And then you can verify all of that. So the fact that you get paid cash is not an excuse not to do your taxes. And then, you want to try to purchase a home. I know we like to keep money in our pocket, but in order to verify everything, we're going to have to make deposits in the bank.
Right. So just to make sure that everybody's clear, when we say self-employed, if you don't get a W-2, you get a 1099, or you do a Schedule C, then you're considered self-employed or a contractor.
Contract work.
So contractors,
1099.
yeah, they fall underneath self-employment requirements.
Yeah, because they're probably going to get 1099, but the 1099s may come from multiple people.
Right. Okay.
Yeah.
So that's why a lot of times when people have a 1099, like for me, for instance, I do different things. Like I do notary, I'm realtor. So I get 1099s, but I run it through my company. Right. So I would have to do it that way. So this was a question that we had the other day. So this person is self-employed, and she's like, well, how much money do I need to make in order to apply? So I know that that's like a hard question, because I was like, I can't say a specific amount of money that you need to make, but I don't know if on the lender side you see, like if I make $30,000, can I still qualify for a house as a self-employed person, or do I need to be striving for like 60,
So in all situations, it's the same formula.
Mm-hmm.
How much money does the buyer have coming in on a monthly basis, and how much does he or she have going out on a monthly basis?
Okay.
So let's use the example of the self-employed borrower. If you make in your business $100,000, but you only show 30 on your taxes, but you live as if though you make 100, it's not going to work. Because typically you're going to have multiple car payments, or your credit card bills are going to be higher. So if you live off the fact that you make $100,000, but you show 30, your debt, the income ratio is going to be super high, right? So that's where showing a livable wage based off of your living. Some people, a little bit more savvy than others, are able to put their vehicles in business names or things in business names so it doesn't show on a personal. But no matter what, you can make $15,000. If you don't have any debt, then you can potentially qualify, right? Depending on the market. So you don't have to make a specific amount of money to qualify for a house. I've helped people who made $30,000 a year buy a house and couldn't help somebody who made 130 because they had too much debt.
Okay.
So it's still that factor of how much do you have coming in and how much you have going out.
Right.
So you just have to do a good job of tracking it. And yeah, who wants to pay the government, right? But that down payment or that money is going to go somewhere. You're either going to put it in the down payment. If you really want to buy a house, you're either going to put it in the down payment towards the house for a different program that requires a larger down payment, or you're going to pay it to the IRS. Either way, that same money is going to go somewhere.
Well, when you put it like that, okay.
It's going to go somewhere.
Okay. So, all right. So I guess my next question is, so even though the qualifications are the same, so no matter what, you got to have the 2 years, right? So because I had a lady who she was told 5 years, and I don't quite know where that is. So it's for sure 2 years.
Sure as my name is Kevin Jefferson.
Gotcha. All right. So let's say I get a lot of people who have a W-2 job, and then they're shifting. Like they have a side hustle that they might be trying to make their full-time thing. So let's say I'm that person and I'm like, I want to buy a house. Is it advisable to still stay on the W-2? And I don't know if this is a fair question. So is it advisable to still stay with the W-2 job and then transition after we close? Like, is it a better chance that I can qualify with a W-2?
So if you're on a W-2 job, if you go from a W-2 worker to a 1099, then you're going to need, in most cases, you're going to need 2 years experience as a self-employed borrower.
So it starts back over. Oh, that sucks.
But if you go from a 1099 employee to a W-2, then as long as we can verify your income, you can switch. So when you switch from employed with someone else as an employee with someone else to a self-employed borrower, that changes because now you're not getting taxes taken out. You've never managed your money where you had to manage the entire business for your sole income. So it's different, and then again, you don't know, like on a W-2, we qualify you based off of gross. So you could make more money gross as a 1099 employee, but how much are you going to write off? That goes back to those tax returns to where we give you what you show as a profit on your Schedule C or on your S corporation.
Okay, which makes sense. I was going to ask that. That was going to be my next question. Like, it's so weird how with W-2 you guys use gross. Well, not you guys, but the industry uses gross, but with the other it uses what you bring. And I get it, I do. But sometimes, if I'm a consumer and I'm trying to explain that, as a professional to someone who is self-employed, they're like, it's not fair. And I can dig it. It can feel like it's unfair, but the reality is that as a small business owner, whatever you actually net, we know is realistically what you're either living off of or what you're, doing for yourself. So
let me touch on something else, Shannon.
yes.
So there are some savvy business owners, right? Who say, well, I own my business and I pay myself in the W-2.
Right.
You still own the business. So we still need the business tax returns to make sure the business has the ability to sustain paying you the wage that they give you. So just to have a W-2 from ABC Corporation that you own doesn't meet the requirement of being a W-2 employee and getting around the other items, right? So then we need the W-2 and then we need the business tax returns and personal to make sure that the business can handle paying you your wage.
Well, that is something that I really didn't think about, because that was really one of the things that just came to my mind right before you said it. It's like, okay, well, what if I do pay myself a W-2? Okay, again, makes sense. It does. Is there a restriction for the loan types that you can apply for as a self-employed person?
No, you can do, FHA, USDA. If you're a veteran, you can do the VA loan. You can do conventional financing as well.
Okay.
So there's no restrictions on what you can qualify, what program you can qualify for, whether you're self-employed or not.
Okay. Well, I think that pretty much covered most of the questions that I got as far as, self-employment, because like you said, at the end of the day, once you have the income requirement or what the income is, it's still going to go back to whatever the regular requirements are with regular, home buying.
So you could potentially do a bank statement loan if you're self-employed. Yeah.
Okay. Can you share that a little bit with us for people? Because that's something where I've had people say, well, I've seen people or I've heard about these different loan types where you can just do it with a bank statement. What can we do? So can you explain that a little bit?
So bank statement loan is where we get either 12 or 24 months of your bank statements. It can be personal bank statements or business bank statements or a combination, right, of those two bank statements. And we look at the deposits that go in that are business related. So example, we can't use your wife's deposit from her check that got deposited into your account as income. It's going to come from your, let's use, painting business where you've gotten deposits, and we give you credit for those deposits. Now, we also understand that there's still some expenses to do at the business. So right off the bat, without any documentation, they can give you 50% of the income that you show. However, if you can get something from your tax preparer showing that your business, what your business liabilities could be. So example, we can go as high as 85%. So if 85, if it only takes 15% of liabilities for your business and 85% of it is profit, then as long as we have a letter from a tax professional, a verifiable tax professional, a verifiable tax professional,
Okay.
not your auntie if she does them on the side, like somebody, because what they're going to do is they're going to Google the tax professional's business name. So they're going to verify that.
Verifiable, like PTIN number, verifiable.
Something
Anybody
online.
can pretty much start a tax business. Now,
Right.
I'm not, please tax preparers, do not jump on my back. But what I'm saying is that's one of those businesses that oftentimes get coupled with other financial services because the barrier to entry is not extremely high. Like
Right.
you don't have to be a CPA in order to run a tax business.
Nah, we don't have to get it from a CPA.
Okay.
So just like a verifiable business, I mean, they may look up 411 or Google your business to see if you have a viable business. Typically, they get it on letterhead. They're not trying to trip you up, but they just want to make sure it's a verifiable person, legitimate. So then we take those deposits and we give you credit for it. We calculate the same way though. Like once we give you credit for that income, we look at how much money does the buyer have coming in on a monthly basis now that we can use, and how much is going out. Now on bank statement loans, because there's less documentation, there are two risk factors. There are you have where they will I lost my train of thought.
You were talking about, you had just said that making sure that they're going to verify that you're listed on 411 and everything like that. And then that was the last part that I heard. While you're thinking about it, if you need it, is there any legal business whose income you can't use? Like I know sometimes, especially when you're trying to do like a merchant account or something like that, it might say, oh, we can't do dispensary industry or this industry, that industry, and this industry. I'm not going to name them. You can Google it. But are there any industries that you guys are that aren't able to be funded as self-employed individuals?
Not to my knowledge.
Okay.
I know from time to time, I think it's the cannabis industry gets.
It's a little heavier because it's a cash.
Yeah.
I think it's cash only still, or maybe they're using like the Bitcoins and things like that. Because like I know in the state of Delaware, we can't discriminate like against anybody based off how they get their income. But every state doesn't have that because that's not a federal protected class. That's specific to Delaware. So that's what made me think of that.
Got you.
Okay. So it sounds like too, if you're not getting anything else from this because you guys are not necessarily like you said trying to trip anybody up, but you just want to make sure that everything's on the up and up. You should list your business on 411. So I definitely caught that little nugget, making sure that you have like a legit email, just different things so that if somebody goes to check or if they go to look for you, that your information is there. Like you're not hiding as a business owner. So it's not like, hey, I'm selling slushies from out the garage, but don't tell nobody. Don't tell nobody I'm over here selling these slushies. Okay. So I think this is pretty good. I think it's a good place to start. And I think it's helpful because oftentimes you think just because I'm self-employed, it's already hard enough. You know what I mean? Because you're always trying to grow your business and a lot of times you're doing a lot. But this is really helpful because it gives us an idea of what you can do to start. You need the 24 months. If you're going to do like a bank statement loan, like you said, or if you're a business owner who paid yourself a W-2, you're going to have to make sure that you have both tax returns. And that's another thing I find too with a lot of small business owners. Taxes are not done like for a while. So they need to have their most 2 recent years.
Yeah, 2 recent years of tax returns, all pages and all pages and all schedules. That's if you're going the traditional route. And I know what I was getting ready to say. So with the bank statement loan, because there's less documentation, there is a higher risk for the bank on the loan. So your interest rate is going to be higher and your down payment requirement is going to be higher.
Okay.
Minimal credit score 600. If you have a 600 credit score, they're going to look for 20% down. If
Mm,
you 660, 15%, and 700 or better, they're going to look for 10% because
okay.
they're looking at level of risk. So if you got a better score, the least amount of money you need to bring.
Mhm,
They factor in student loan debt as well.
mhm,
If you don't have a payment arrangement or they're not deferred, they look at 1% of the balance
mhm.
for your student loans on a monthly basis, even if you're paying them or not. Even during this time where no one is paying them, they still have to count some form of payment because this isn't going, I don't think it's going to last 30 years. Um, and then just having the funds available to you in your account. So I'll be honest, Shannon, it doesn't work for the person that makes 30, $40,000 a year in that
Okay.
business
You need
because
to
they
be
don't have the
home.
down payment. Typically, they don't have the down payment or they don't show enough income. Like for that person, it typically doesn't work. Not saying that you shouldn't try,
Mhm.
but it's hard to qualify for a house like that. And you've written, I mean, you may not have, you make $30,000, $40,000 a year,
Mhm.
and let's say the average house in your area is 200,000, and let's say you have to come up with 10,000, 10%, that's $20,000 just
Right.
for the down payment. That doesn't include the closing costs. So, unless you've been saving over the years.
Hmm. So, okay. So maybe I work like a little part-time something and I'm able to save $20,000 while I'm doing my business, you know, because I'm not there to that point to let it go yet. So that business owner, it could probably work a little bit better for because they have the money saved.
Yeah, and I always apply.
Hmm.
Like the only way for us to know for sure what you need to do is allow for us to work up your scenario,
Hmm.
because your scenario may be different than mine.
Yeah.
Um, the little bit of income that you show on your taxes, but your husband or wife has a regular W-2 job, may be able to get you over to go traditional financing.
Hmm.
Um, so it's just, I always say it doesn't cost to have a loan officer take a look at your file and tell you what you need to do to get in position.
So let's say I have a 401k. I don't work anymore. I've been doing my business for a couple of years. I had funds in a 401k. I can use those funds with this program too.
You
If I'm
can,
okay.
yeah, you can. You can use a
Okay.
401k, IRA.
You don't
Um,
care.
yep.
Okay.
No mattress money.
Mm,
But if you have it, the funds somewhere, you can utilize it.
okay. All right. Because, and again, I ask too, because I don't know if you're familiar with the cash envelope systems, but some of these people, they are like stuffing, they're doing like these money challenges. They're saving like $1,000 a month, $5,000 in like a year. They're doing these different little challenges to generate these high amounts of savings. And it's like mind boggling. Like if I didn't see it on Instagram, and like you said, social media has kind of COVID and social media, I think, has changed the way that everybody does anything. And it opens your eyes up to more possibilities of things that could happen. Like I would have never thought that a person would just, stuff a couple envelopes in the beginning of the year with different numbers amounts on them and be able to save $5,000 by the end of the year.
Mm.
Yeah, it does stick like 100 envelopes, like in a, like like a little envelope pack or whatever, and they'll write. I don't know the exact numbers, but they'll just kind of write $2, $56, whatever they pull, they save it, and by the end of the year, they have like a larger amount of money saved. And some people do that, and that's how they thrive. They make their money, they do it. They might do vendor shows. When you start talking to more self-employed people, you start hearing a little bit more about the different things that they do as far as generating income as well. So this has been helpful. Is there anything else you want to give us your tidbit about how they can reach you if they want to reach out to you to learn more about the different programs and ways you can help become a homeowner as a self-employed person?
Yeah, you can reach out to me at team, TEAM,
Mhm.
Jefferson, JEFFERSON, at summitfunding.net. That's going to be the easiest way to do it.
Hmm.
You could send me a text at 470-485-6267.
Mhm.
And yeah, just reach out if you're interested in purchasing a home and you just don't know where to start, or you get stuck, or you've been denied, or you're looking to refinance,
Mhm.
get into investing, want to invest in a rental property, just reach out and let's grab a phone call consultation to see how my team and I can help you.
Cool. Sounds like a win. Look, so and I didn't say this in the beginning, I usually do. Shannon Payton with eXp Realty Delaware. And again, today's focus was to help self-employed individuals understand the requirements to qualify for a home loan. If you're getting here late, it's okay. I will keep it posted on my page. And if you are on my email list, I'm going to send this out to you so that you can have something to refer to, because you don't have to not that there's anything wrong with YouTube University or TikTok and Instagram, because some people are giving out really good information, but the goal is to try to get out as much accurate information as possible. So I definitely appreciate your time. If you guys have any questions, be sure to follow me, as we're going to be doing probably 2 Q&As a week. So whether it be about mortgage qualifications, real estate, I need to stage my home, insurance, whatever it is, make sure that you follow us so that you can stay up to date on the different things that we share on a week to week basis. I hope you guys have an awesome one, and thank you so much for joining.
Have a good